Crypto. Welcome back to the Closest Faraday Show. During the live shows, we're going to cover Bitcoin price action first, Ethereum, then XRP, then I answer some questions. Feel free to ask questions before I get through XRP, but I won't read them until I get through that portion. And if you're newer and you feel that I might have skipped over your question, you're probably right. I probably did, because I usually can only answer the questions asked by people with an emblem next to their name, which means they are a YouTube. I dropped a laptop. A YouTube tier member. Let's not do that again. And I try to answer their questions in priority. With no further ado, I'm going to start off this video with a question for you. And Harry Potter cloak. There we go. Do you think, so look at this chart, and for a time perspective, just realize that all of this is about 140 days. This is the 2-hour chart on Bitcoin. I have added a rainbow system, so you can kind of visually take a look at momentum and compression and all that kind of stuff. It helps you visualize price a little bit better, even take price off. So when the rainbow's above the gray line and blue line, it's a very bullish moment, and it acts kind of like price with resistance. Like this is a resistance when the rainbow's under. Got rejected from it. Now it's sloping down, but not too far away from it, and it's compressing. So with this chart, my question for you is this. Do you think Bitcoin will hit line A first or line B first? It's not going to hang out forever between two origin lines. It could be a while, but it's because volatility expansion is going to happen pretty darn soon. It's likely that one of these two are going to be tagged, before the end of November. So which do you think it is? And you can go ahead and leave me a comment to that question in the video section. And if one of my clone scammers, or the only clone scammer I have, responds about Telegram or whatever, I will try to delete it. And this is the time for new viewers to go ahead and subscribe, hit the bell for all alerts, and returning viewers, smash the like for me for your content creator, and let's get freaking moving. Let's get some darn Bitcoin. What we're going to do at the beginning of this Bitcoin analysis, nothing crazy has changed on Bitcoin. We've been covering the sideways action for a while. Let me go down to the smaller time frames, and I will put on what I have on my live chart, all these key bumpers. So these are essentially all of Bitcoin's bumpers that are in play right now. I should put them on the chart right there. So this is literally everything that is in play for Bitcoin in the immediate sense. And I have other, price bumpers both north and south of here. Try to get it all consolidated for you. So for new viewers, if you want to put this on your chart, this is literally everything that's in play right now. You have a form of triangle trend line coming up, and you have one coming down. They come to a pinnacle around the 22nd, 23rd. So something interesting could happen here, but this is only the small-term time frame triangle. There is a larger time frame triangle, which its pinnacle is out like past November 6th or something. So if there's going to be a fake out either way in price, or a strong move without continuation where it goes, from the middle point, it either goes down at this point before the monthly closure, I would suspect it has an increased chance of coming right back up, maybe getting rejected from its breakdown point before then November, first week of November, going down after October closes, or around this point, around the weekend or the 20s, let's say, around the 22nd to the 24th in this area. If you get a move to the upside, I think that also would have to do with, or have a higher risk of turning back around sometime in early November. So this would be, around this area, the micro time frame triangle coming to a conclusion about a week and a half prior to the more massive time frame triangle out here. This is a perfect opportunity for whales to trick people and bait people. That makes sense, because the more important, I guess, pinnacle formation is further out in November. So watch out for something to happen around the 22nd to the 24th because of that reason, and that's what these that's what those lines are right there, zoomed out. But more immediately, this is pretty much everything in play. And if you want to emulate this on your chart, I strongly suggest it. I'm on the 15-minute chart, and I have the MTF EMAs, meaning I can put different time frame EMAs on here, even though I'm on the 15-minute chart. So let's summary. You've heard me say this before because Bitcoin hasn't done anything. If 19K is broken, or roughly 18,945, just a pretty exact number. See this recent move down? Look, I mean, this is a real line that's being defended. See that? It is to the dollar. So this is a real line, and that is the price point right here. So you need a box between 19,013 and 18,946, I guess. But if that is broken, there is a potential bounce point at this next area. But the next time, so here is what might change. Because this has already been pierced over here once, the next time this is pierced, that could be it. That could stimulate continuation to the downside. So taking out 17.5 lows and everything. Yeah, it's fine to pierce it once and bounce, which it did very fine. It actually pierced like 2 levels below. So let's see what those are. But I think this level right here, from a CME perspective on weekly, from Bitcoin spot price monthly candle bodies, this is kind of a line in the sand, but this is the big line in the sand, which would initiate a move lower than 17.5 the next time it goes below it. So this is not immediately in play on short micro time frames because Bitcoin's using this area as support. But just realize I had it pretty zoomed in, and I said you might want to copy this. You need this box with these exact figures here. 18,565 and 18,650. These are very precise numbers. I strongly suggest you put that box on your chart at those nearly to the dollar exact levels right there. All right, let me make myself small. And that is the move that would absolutely be initiated should price break back below this level here. See that? It will go there. It's not going to stop somewhere in the middle. Okay, especially after hitting it twice. That if it falls through after hitting it twice, it's going to go straight here. And if that happens tomorrow and it goes below here and doesn't get back above it on its first attempt, exactly like it did here. So sometimes it's not a death sentence if you can bounce and don't have any rejection whatsoever, which is exactly what happened here. I was actually kind of surprised. But the next time it happens, I suspect that it'll punch through it, and then it'll maybe pierce it, but then it'll start heading back down like this and eventually get rejected and then accelerate. And there is something that happened in Bitcoin price today. So this is the more exciting part of this Bitcoin. So these are all the levels. I'm not giving you upper levels because I don't see them in play quite yet. But copy those levels if you're newer. And I want to show you the perfect example of how price moves in a way that allows you to know that you have a strong edge, a statistical edge, that your trade is extremely likely to go your way. And it's almost exactly the thing I draw a lot on my channel, where I suggest to you, it's if you see a support or a resistance, it's not just a candle closure. That is the thing. That is just for fake outs now. It's how the micro candles, 5 minute, 1 minute, react to it. And I draw this all the time. Bitcoin just did it today with the daily 10 or the 1 hour 200, which is the same thing. So I want to show you this. These are the things I draw, and it was the first perfect setup on Bitcoin that I've seen in a while. And I did take that trade and I executed it. I only held it down, I think, to here, but anyway, let me zoom in. So this is the 1 hour 200 EMA, and this is why I spend so much time showing you how price will move if it's going to initiate, a strong move down. And then I'm actually going to show you, after this, I'm going to show you an example of the opposite, like a trade that would have, like one you just would have had to miss out because it wasn't probably, you didn't have the edge, even though in retrospect it's XRP. Even though it happened, you didn't have an edge at the moment. Like there's no way to have traded that with a strong edge at the exact moment and initiated the move. But Bitcoin, it did. All right. So the daily 10 EMA is a support and resistance line that is, in play in bull markets and bear markets. I like the one. This is technically the 1 hour 200. Okay. So for context, price had bounced off this bottom box, created a nice higher low structure, getting all the way up there, got rejected, nice pullback, and then it spiked above on a pretty aggressive move. So whenever you have an aggressive move above, or you just punch through a resistance, and the same thing for support. If you punch down below support, but if you punch through it, the way that you can tell that your edge is beginning to form is not because of large, like 4 hour daily candle closures. I'm telling you, it's not. It is the micro, and I'm on the 1 minute. It is the small candles. Because after you punch through, the first time you come back to touch it, which is, as XRP fans in my analysis, like you probably didn't believe that it was going to come back and touch that triangle after it punched through. Well, it did, right? So it usually does. After you punch through a support like this, it's extremely likely that you'll come back to touch it. But it's the way that it touches it that your probabilities start forming. So because it came down and these 1 minute candles did not find this line as support, that means you instantly have a slightly higher probability that the way this move in general will resolve itself is to the downside. Is it a strong edge at that moment? No. But that is when your probabilities, you start getting enough data points to like have something to work with, right? So at this exact instant, I was kind of like licking my chops, kind of looking for a rejection from this line later. So my plan was, okay, I'm going to wait till I see a clear rejection. And then once I get a rejection, I'm going to look left. This is what I say on my channel all the time. I will look left, look for the most recent low, but after a rejection, and then once it takes out that low, that's when it'll accelerate down, right? You've heard, returning viewers, you've heard me say this all the time. And for new viewers, watch, like what I'm covering is exceptionally valuable because it works for both when you punch through resistance or when you punch down below support. It's the same thing, and it almost always works the same way. All right, but I will also show you an instance where it didn't with XRP because XRP just likes to move like its own freaking animal. All right, so at this instant, I already became interested in looking for a short, but after you get a rejection. So all this stuff, okay, no rejection yet, comes back up, almost takes out this high. It's like, uh-oh. It's like, man, my short isn't going to work. But then it came down, and I probably would have flipped long had these small candles used this as support, and then it takes out like, this general area here. I probably would have I definitely wouldn't have been short after that point. But once again, it found support under this line, right? And then it made a lower high and then fell below it. Still no rejection, so I'm still not looking left. Finally get that rejection, true rejection. And now I know, hey, if it starts getting closer to this, that is exactly when it is going, like this is when it will accelerate. Somewhere, like maybe some people would look at it here, but somewhere in this area. So just kind of put a box here. This is where the trade will become very probable. However, I entered half of my trade on this candle. So after this candle closed is when I entered half my trade because that momentum kind of confirmed this as a rejection and all this as a rejection. Does that make sense? And then I added the second half of my trade at this candle after it fell through there because I knew this is where it will accelerate. So look, that is exactly when it accelerated down. Perfect setup. And I hadn't given a VIP trade alert in a while because there's nothing to alert for in this choppy price action. And I'm not a big fan of trading altcoins. as much on leverage in a bear market. So I've been mostly focused on Bitcoin and Ethereum, and this is the first one I did, and I did that because it was absolutely perfect, right? So this is in practice, like something I preach probably in every other video, if not more than half my videos. We finally got an exactly perfect example. I guess I will cover XRP individually, but this is the opposite of that. This is that not working. Look, you have a support here. It's kind of so you also have the approach to support was different, right? Bitcoin went up and turned resistance into possible support. So this is kind of a different play, but still the same idea, but it's inverse. So the way I usually see, the way Bitcoin usually behaves is if it finds support below the actual support, then what I do is I look for a rejection point like this, and then when it takes out the low looking left, that's when it accelerates down. I like to take the trade, right? And this didn't happen. So XRP, it not only didn't do that, but it formed a low, or a higher low, higher high, higher low, higher high, and then went straight down. So this is an example of, you don't look back and say, oh, I should have done this. I mean, probably no. Like, there's no way you wouldn't have had an edge here, right? There's no way. So this is one of those things where you shouldn't feel bad about not hitting it, because this structure here, you didn't have anywhere close to a probability of that working out or of that even happening, right? But on Bitcoin it did. And so remember that idea, not just that XRP moves like its own animal, but on Bitcoin, we just had an exact example happen at a major line, one of the main key lines we have in play. And so the same idea could happen at both of these next, and this is how I want to wrap this portion up. So remember these next two blue box areas here, okay? This will initiate a move down to here. But going below here could initiate all-time or yearly lows below 17.5, right? So on Bitcoin, because Bitcoin typically follows those rules, the first time it dives past 18,945 or whatever, like it did here, that's not necessarily time to say, hey, I'm going short. You want to wait for it to punch through, then get rejected, and then start making a lower high, and that's when you hit. Does that make it? Not financial advice, but that's probably what you're going to see. So you're going to see something like we just dissected up here at the orange line, but on the one, so I'm not on the 1 minute time frame anymore. But when it goes below here, you don't want to just attack it because it goes below. You want to wait for what we just saw up here that I dissected. And you can use the 5 minute chart, 1 minute chart, doesn't matter. But I would recommend looking for something similar, both at 18,945 and at this level right here, 18,565. Because the same thing, something that smells similar is very, very, very likely to happen. Does it happen every time? No. Sometimes just blast through. But those are the times, that you can't really, you don't have an edge exactly at the moment. You don't have an edge of guessing when it'll accelerate down. Makes sense? And that is what we got for Bitcoin price. All right, now let's take a quick look at Ethereum. I'll try to keep this a little shorter because Ethereum is pretty doggish right now. I don't know how I want to visualize this. Hold on. Before I make myself, I know I'm big. Okay, I know how I want to do it. Ethereum has been more doggish and a little bit more bearish than Bitcoin. Another way to say that, it's been much easier to short than Bitcoin over the last, I don't know, I would say well, technically since September 16th after the merge was completed. But even, yeah, literally since then, it's been easier. With that said, let's go ahead and do our Harry Potter cloak here. Hey! And so my question for you is, hey, what direction do you think this is getting ready to go? If we can look at it visually this way right here with my Harry Potter cloak on. What does it look like it's going to do? Kind of taking a guess, even if you're an 8-year-old who's never looked at a chart, would you guess up or down? Now let's add something else on. That's too big of a time frame. Here we go. And let's remove these guys right here. Now, which way do you think this looks like it's going? It looks to me that the pressure is down, but here's the key. Those two lines that I got rid of, they are coming to a conclusion pretty soon. So there's going to be something, let's see, how should I say this? Ethereum Price has the ability and the habit of influencing Bitcoin price. Sometimes from a perspective of 3 months, sometimes from a perspective of a fake out that lasts 2 days. But because Bitcoin has the interesting, so in my Bitcoin video that we just went over on the stream, but that I also recorded today on the 20th of October, Bitcoin has a 1 minute or a 1 hour triangle that has a pinnacle around October 22nd to the 24th. But the bigger picture triangle, like the big breakdown, goes out to about November 6th, which is after the October candle closes and after the FOMC meeting on November 2nd, right? So you're at a crossroads here. Well, Ethereum has to resolve itself before Bitcoin has to resolve itself. But within Bitcoin price, there's a micro triangle that also needs to resolve itself at the same time Ethereum's bigger triangle does. So with all those, hopefully I'm making sense. With all those puzzle pieces put together, it seems like if there's going to be a move that is violent and then comes right back to where it was, it's going to be initiated by Ethereum. So for example, a tag down here, then it comes right back up for, the November open or the October close, and then it slaps down. So watch out for this. Like Ethereum is a pretty good, chart for, will all of crypto have some type of move before October 31st and November 1st that influences Bitcoin greatly? And if so, there is a heightened chance that it'll snap back up here around November something, or around the October candle closing, because it'll have 8 days to come back up. Because this is going to have a pinnacle of the 22nd to the 24th. It'll have about a week to come back up. So keep that in mind, and you'll be able to front run that idea by looking at Ethereum's chart. All right. So let's. So Ethereum's chart is doggish, but I think it's ever important because of that. And you know that when you have moments of myself big one more time. So conceptually, in moments of compressing volatility, you're going to have an expansion, right? That's in the stock market, like the price of oil and black market testicles and all that stuff. But the expansion doesn't mean one direction. It just means price starts moving faster, right? Or moves more. From closure to closure, day in, day out, there's bigger separation. That's all it means. And so a lot of times an expansion of volatility, it's bi-directional. But one thing I haven't really covered on my channel a lot is, and what seems to be brewing up to be maybe more likely is, instead of, let's say the true direction's down, so therefore your fake out has to be up in order to get bi-directional volatility, right? That's the most common way. But with Ethereum being doggish and needs to hit it's going to hit its pinnacle early, it almost seems like the way bi-directional volatility will happen is true direction first, snap back up to the bottom of the triangle formation, November 1st, let's say that happens around, November. Let's say this is November 1st right there. Too many purple lines. Let's just call that roughly November 1st. And then maybe a little bit of a backfill for the first few days of November, and then it starts heading down. I think it could come in form. I think volatility expansion might come in this form. Correct direction, back to the middle, tiny fake out to the upside, and then down. So watch out for that. And because the reason I'm going over this is because I don't cover that idea a lot. I guess not even on my Discord, but not on YouTube. And it's going to be more visible on Ethereum. True direction, back to the middle, baby fake out, then down. Keep that in mind. I think that's one of the... that's definitely one of the top 3 scenarios of what's going to happen between now and the end of the first week of November. So this is November 1st. FOMC will move Ethereum and Bitcoin. It happens just after. And sometimes, the momentum of a move after FOMC in the wrong direction lasts the entire rest of that week until the next Monday. So let's put a point there. And then Monday doesn't open until here. So it's possible that this is when true direction happens again. So let me draw this out. True direction, back to the middle, November close, FOMC gets momentum, and then it loses the momentum, and then true down. Make sense? Watch out for this. All right. Now, if Ethereum does spill, there is an origin line down here, and it's ascending. So if Ethereum spills down, just realize it's not going to go straight to $1,000 or anything. You have a point where if it fell today and went straight down there, it would be about 1203. Let's say if it happens around the 22nd or 23rd, that's 1210. So just remember 1210, you could get a pretty serious bounce from there. Not a reversal, but a very serious bounce. Okay? I'm not enticing anybody to try to catch a knife there. But, in terms of profit taking for shorts and all that stuff, just keep that number in the back of your head. Because you're not going to find this origin line on anybody else's channel on YouTube or the whole internet, right? Okay, now, I'm not really going to do upside targets for Ethereum, but just realize the importance of Ethereum price on how it relates to Bitcoin, how it relates to bi-directional volatility, and where it could bounce. I think that's most of Ethereum price analysis. It's a little bit different today than I usually do, but it can allow you to front run Bitcoin pretty well, so keep an eye out on Ethereum. And also, if you're playing around with charts and you're trying to short, it's a lot easier to short Ethereum. Just a heads up, not financial advice, but we're finding that out in our Discord. And that's it for Ethereum. Okay, do XRP. Freaking XRP. XRP had a very tradable move today on Thursday, October 20th, but its setup was horrible. I didn't take it because it wasn't a good setup, but it was a great move for anybody who caught it. So what I want to do in this video is I'm not going to give so much of a price analysis on what direction everything's going to go today. I want to more analyze what just happened today. And then perhaps give a quick suggestion on where I see price going. So let's focus on that. Let's go get it. Okay, so even though my ribbon information, don't leave comments. Hey, how do you set this up? This is, I offer this for my VIPs on Discord on how to set up my ribbons that I created. But so anytime price goes below my lowest line, that means I have to move up a time frame, right? So at this moment right here, I would have had to go to the 2-hour chart because it went below my last line, right? That's just how these ribbons work. That's how I designed them to work. All the time frames are fluid. Like they literally go with each other. There we go. So after that, I would have had a profit taking point had I taken this trade. And zoom into that bad boy. There we go. Right? So that area, even if it doesn't align with some horizontal or something, there is something there that algos are looking at, right? And that's what, for some reason, that's how these ribbons function, is they help you visualize what advanced trading algos are doing. It helps you, I don't know, it gives a frame of reference so you kind of know what's going on. That's how I interpret them anyway, right? However, its price is also below this gray line. So I'm just going to mark off levels here. So you have price right now trapped between two levels. And I there might be horizontals or trend lines, and maybe I'll find them here in a bit so we can see them in an easier way that you could put on your chart. Just kind of shooting from a hip here. These two levels right here are in play. So the next time it comes down here, could easily bounce. But if it goes below this and uses it as resistance, that's your next leg down. If it gets above this and uses it as support, that would be your next leg up. But anywhere between this area, which how big of a range is this? Maybe 3%. No, it's almost 5%. This 5% range, there could be a lot of compression, right? It could just go sideways in here. So watch out for that. Like, I honestly don't know if I would expect a big move anytime soon unless Bitcoin moves. Now, something that is between here is something very standard that we use a lot on my channel. It's the most important indicator, in my opinion, is the weekly 10 EMA. But what was the rhyme and reason for this to happen? Like, why would it spike so far below to take it, maybe to grab liquidity, so they could take on longs here? But that's what the ribbons are. That's what the ribbons do. Like, they help you see rhyme and reason when there's nothing else there. Like, why is it going below? Like, how far below should it go below here? If that's the whale plan, to take it below and then snap it back up above the weekly 10. So that's what is in play. It went below the weekly 10, snapped right back up. Let's actually go to let's go to the 1 minute chart. See how it interacted. Look at this. Look, it stayed on the blue line that I had earlier. It stayed down there for seconds. Snapped right back up and closed that 1 minute candle almost exactly at the weekly 10, which is this red line. Then went straight up. So let's look at the anatomy of this bad boy. So I would say if you want something on your chart that you can put on for a 2-on, kind of have a good guess on how price will move, I would say, yeah, there was a stutter step. Yeah, there's a stutter step over here. So this is how I would see a miniature range resolution on XRP to try to get the next move right. And specifically, not entering a trade when it's just going to float around and compress. It's the easiest way to lose your money and bore yourself and frustrate yourself and make yourself give up is not identifying when it is a good time not to trade. So I'm showing you these micro levels because they could be really important for you. So bottom of the range is the weekly 10. Top of the micro range is here around 44.3 labeled, and then you have the middle where it had support, resistance, fake out, but then it came back and used this as support. So let me label these. So on XRP, you'll want these 3 items on your chart for general guidance. Weekly 10, the middle, and the top. That's it. All right, now let's zoom out to see if there's anything else in play. Maybe the daily 10. Where's the daily 10? No, the daily 10's not in play. No other major EMAs in play. Now let's look for something else that might be tangible. Trying to show you something that would align about the same. All right, so the wick, let me zoom in. I'm on the, let me go to the 1 hour chart. So it looks like the wick high on Friday, August 26th, with the low on August the 10th. Low August 10th, high August 26th. That might be what other people are seeing here. All right, now let's zoom into this bad boy. So if this breaks down, if the weekly 10 is broken on XRP, then you could expect a potential bounce at this area here if you made this line. And that could be useful, not for trying to catch a knife. I'm definitely not saying that. In the bear market, I don't know if catching knives I don't know if it's ever a good idea. But just in terms of, moving stops and, perhaps taking profits, that would be where I could see it bouncing. Capiche? So how big of a move would that be? So it gets rejected by the weekly 10, starts falling. That's another 4% move. To the upside, you're going to have this triangle that we've been looking at for a while. It looks like this time, because of this momentous move below it, it's probably going to be resistance. That's an obvious one. I've already shown how to do this. Set up the triangle on previous videos. So if you want to take a quick look at that triangle, maybe I can hide stuff. Oop, I even hid the triangle. There we go. And this triangle might be made on the 15-minute chart, because or the 30-minute, the 15 to 1 hour, because it'll help you see it more clearly all on one screen. So go to the 1 hour, spread it out. That's what the triangle looks like. So you need to so this is also in play to the upside, because it's very, very, very likely going to be used as resistance. And again, there are two ways that not just XRP, but resistance is used. Either straight up, it comes in form of a perfect rejection or a failure pattern. And a lot of times those are coupled. Sometimes they come by themselves. So, for example, if you see price get back up here, again, it's not just one level. It's an ascending line. So I can't give you one price. But as of now, it's close to 45.45. If you see it up there, just realize the way price will interact with it could be one of two ways or a couple mixtures of those two ways. First is a straight up rejection and then back down. That's a rejection. That might be what happens. But second way, failure pattern. Or you could get a mixture of those two. This is if it comes back up there. You can get a rejection, take out a low, then spike up, and then come back down. So this is called a rejection failure. And this happens on all cryptos when they come up to a resistance point that they're not going to pass, but it makes it look like it will. And a lot of times the anatomy within that, to be even more specific, a lot of times after it gets rejected, it'll take out the previous higher low on its way up there. It'll take that out and then zoom up, because it helps fake out a lot of people. But it's essentially a fake out with another fake out and then true direction. So watch out for that. And the last way that I could see price interact, or the fourth way that is within the realm of most likely ways, is rejection, or no, failure, rejection. There you go. Just failures and rejection. So it's just flip-flopped, right? First was a rejection, then a failure. Here it's failure, then rejection. So if it gets back up to that triangle, It'll very, very likely move in one of those four ways, unless it decides to move like its own animal and do something that is not common at all, which XRP is famous for doing. It's kind of its own animal. But in this event, since it fell so decisively from here, if it touches it again, I think XRP has a very high chance of interacting with the bottom of that triangle in one of those four ways. All right. Questions? Let's do it. Let's get this party started. Okay, and again, for anybody just jumping on here who might be new, I do skip over questions that do not have the emblem next to it, because during live shows, part of the perk for being in the YouTube cryptillion or the YouTube tiers, which there's a join button on my non-live. I don't think it's on the live stream. So maybe somebody could tell me, hey, like actually, yeah, somebody leave a comment. Is there a join button next to the subscribe button on the live stream? Anyway, on my recorded videos, there's a join button next to the subscribe button, and a quick video will pop up describing what those are. But one of the things is I'm going to give priority to their questions and skip over non-community member questions for these live shows. That does not, so I prioritize the emblem questions and then super chats as well. All right, here we go. Thank you for the audio check too. Okay, Chris Crane addressing me as a wizard. That works. I'm considering dumping a chunk in ADA for a short-term bounce, like you discussed the other day. Do you think it's advisable to wait for the monthly close first? All right, let's take a look. So I have a question about Cardano. I'm going to record this part. Somebody wants to know if they should wait till the end of the month or the beginning of November for the monthly closure / opening in order to try to play not a reversal of Cardano price, but to play a rally up. So let's go dive in. The question also stated, within the question said, like I mentioned earlier. What the hell? Oh, okay. I thought that was a candle. That's part of my drawing. Okay, so structurally, Cardano. Let me get this off of here. Cardano has among the best and most precise / longest trading channel out of any crypto. Actually, let me make this prettier. Let me get rid of the origin lines. So Harry Potter cloak, look behind me. Actually. Cardano price visually that you won't see anywhere else on all the interwebs. Here we go. I'm going to do my Harry Potter cloak. Boom. Check that out. It's in a trading channel that's 400 days long. It had one severe bull trap along with Bitcoin and the rest of crypto, a second moderate bull trap along with Bitcoin and most other cryptos. And just like Bitcoin has, Ethereum did during a month before the merge, even Phantom, Chainlink, they all had a macro channel, not as long as this one, not as perfect as this one, but they all worked their way out of it, and they were forming a horizontal, and they're at threat of coming back to it. But Cardano has gone back to its macro trading channel before all the other ones. All right, so it is, I guess, more bearish from this perspective than most other cryptos. So keep that in mind per the question on this live stream. Should I wait for the monthly closure before I try to take a ride up on Cardano, right? Okay, so let me make myself small. So that's the context. 400-day long channel. Now let's dive in there. And let's go to the 15 minutes, see if I can fit. Yeah, so since it's entered this mega channel here, support, broke through, hit the next line down, got back above, worked its way above with higher lows. It went right through it. So that means the next time it touches that line, it's probably going to get it's going to get rejected, which is what that means. Especially if you went below a major line, went back above it, crashed back below it, the next time you touch it, you're going to get rejected, which it didn't. It actually worked its way back up a second time. Wow. So higher low, higher low, higher low, higher low. Yeah, in order to get back above a point of resistance after you break below it, you don't actually need higher highs. You just need to maintain a higher low structure, which often is met with higher highs, but not always. So yeah, just look at the lows. So if you just remember that, for seriously, what I just said is a pretty valuable piece of information. So keep that in mind. That's after you break below what was support, and then if you flip it to resistance, you actually have a pretty decent chance of getting back above it, only if you maintain higher low. And the higher highs aren't as important. Okay, so higher low structure all the way up there. Did get rejected, but so as I said earlier, it's more likely to get a rejection, but it overcame that perfect rejection with another higher low. Interesting. So this was really wiggling around. And then so 1, 2, the third time it went back below is when it let loose. Well, and let me mark off November. So November is, I'm going to have to go to a bigger time frame. Your question is about waiting for the monthly close. November's way out here. I mean, I don't know. I think you could still do it before then, but just use risk management even if you're on spot, because we know that this line is real, right? It's not just one number, it's going down, but I just showed you the channel, so try to copy it and make it the same, right? So if you do try that, then you know that if it goes back below here, just get out or set stops below there. And it's a really tight stop. Like you could set it within 1.5%. So here's what I like to say to my Discord community, the VIPs, is let me think about how to say this. If you have a scenario where the risk management setup, so you have setups for entries, but you also have setups for risk management, because sometimes the best entries, like when I go to plan my stops, the candle bodies and all that stuff, it sucks. Like, oh, I want to put my stop here, but it's like triple the distance of where I usually would like to. I'm risking too much. But that's the first area where I'd love to put it, because nothing else makes sense, right? So you actually have setups for both. They go together. Maybe you've never thought about that. But if you haven't, then jump on Discord, we can talk. But so in this case, even before an entry, like not even thinking about entries, you can change the mentality of thinking about your setup for risk management. And it's perfect. So with that context, what I want to say is, a lot of times if your risk management setup is freaking perfect like this, you don't have to be as picky with your entry. Because let's say you have no edge. You don't have an edge on this going up, but you only have a 30% chance of it going up, right? Whether or not to take a trade, you have to calculate risk versus reward. If the risk is really, really small, then that makes it so that you can consider a trade where you don't have a glaring edge. So I think this is a pretty good risk management setup. You can take the information I've given you and do what you want. I'm not giving you any financial advice. But this is a pretty good risk management setup. Now, without that line being there and being obviously like very real and tradable, this looks pretty freaking bearish. So in terms of my expectations on how high it would go, I mean, it would be this top line at most. So let's see how big. So, but it would get there over time. So it'd be like that. It's only a 5% move. So now calculate my risk, is what, 1%. My reward is 5%. And I have a 30% chance of it working out. So you do the math, you do it 1,000 times. Would you be better than break even? I think you would, because the reward is about 5 times bigger. Yeah, I think it would. If you did it 1,000 times, I think it would be profitable over 1,000 times because of that setup. Does that make sense? But here's the question: you really want to try to take that just for a 5% move? And now, if you're on leverage, okay, that's a nice big move. But if your question was for leverage, you probably wouldn't have asked it like that. So I assume this is more from a spot trade perspective. I mean, I typically only spot trade Dash, and sometimes I'll go for a 5% move, but usually I'm targeting more like 8 to 20. And if I don't see at least the potential for it, I won't try it. So keep that in mind. I think the biggest reward that you're going to get out of a spot trade is 5 1/3%. All right, that is Cardano. That's a good question. Rokoshi no dinero. Anyone else get to take VRA profits from the Amazon partner? It's not a partnership. They joined a partner program, of which thousands of companies are already in. But I looked at, to credit VRA, the way that they, on their official Vera views, they did not state they partnered with Amazon. They did state it correctly. Partnership program, something to that effect. Joins a partnership program, or Amazon ad partnership program. But the way that the cryptocurrency news sources worded it, and I can't claim it's with or without the guidance of the marketing team for Verasity. It's possible they did it on their own, but there were multiple sources not published specifically by the team that said partnership with Amazon. So it's actually really good marketing, because the way they themselves worded it, it's not false advertising, but other people mentioned it was partnership with Amazon, which it's factually not. It's kind of a, I don't think there's anything wrong with what they did, but so the reason I took I posted about that is it's nothing against VRA. That's honestly what they did is perfectly fine. VeChain pouted in a bull market 2017. They talked about all these different types of fake partnerships. And price was going up thousands of percent. That is not good, right? So 24%, it's not a big deal. But it's actually commonplace. There's no harm, no foul. But the reason for my tweet about VRA and kind of caution people is, sometimes when you see a move like that, you want to look for a higher low and then expect it to take off and try to take a trade from that. But that was kind of my warning. Hey, I think this will just break down, and here's why. So I hope that it's not necessarily misinterpreted that anything foul play was happening. I think I mentioned in there it's commonplace. It's a commonplace tactic, which it was. It's nothing bad. All right. Okay. So Thurman's HS. Hey, Tim, I'm going to ask you the same question as previous live. With last PA on SPX and BTC, what chances do we have for 20K BTC? That's PA. with last TA, I think you meant. So last TA and SPX BTC, what chances do we have? Oh, so in other words, another way to rephrase your question is, have the chances changed since the last time you asked? Yeah, a lot. And I'll answer that just with SPX. All right, so the reason why 20K Bitcoin looked possible is because with the basis that everybody who is competent knows Bitcoin is following SPX index like to an extreme degree more than 50% of the time, right? From many angles of approach, like hitting the same big EMAs. With a 1 minute candle flip screen, so does Bitcoin's, even though they were both red just a minute ago, but they flip green at the same time, right? Like literally. And so do the hour, like each hour is the same color, right? It's just glaring. But anyway, so that's why I'm looking at SPX to answer this question. And I think you knew that because of the way you asked it. But for everybody else, that's why we're doing this, to answer a Bitcoin question. All right. So what we're looking at the last time, I think, was you had a yearly new low. Like this was a new low for the entire calendar year, but it was bought up like crazy. Then you had a nice retest of the middle, even though it looked like a nasty closure, it's still only halfway down. So that just looks like a normal retest, which happened at the end of the day. Just took the whole day to retest the middle. People bought that back up. And then after that, because this daily candle closed green, that invited a lot of buyers to the table, particularly overnight, which is why there's a gap here, right? For futures, they bought it up, and the next day it was a green gapper, okay? Because this green candle here, closure this day, confirmed that this was a back test as opposed to a fake out to go down, right? So this candle right here confirmed that this was a back test and not scary. Gap up. Then you have an indecisive candle, a spinning top. Then today came up, tested the candle body open of this, got rejected, and closed below the bottom of yesterday's close. Bearish. The last time you asked, we might have been sitting on this day right here, right? Tuesday? Last live show. Here, because of this, the chances of 20K Bitcoin fake out was pretty high. And I was talking about bidirectional volatility. Like in order for volatility to expand, it's got a pretty heightened chance that Bitcoin flies up to 20 to 21K, maybe even 22 change before then slamming down because of this setup. But the setup right now, the numbers are changing here. Is it a death sentence? Not really, but I think the chances are much less. I don't know what kind of probabilities they gave you last time, maybe like 30, 40%. At this time, it's probably under 20% that I would, just kind of, I would say if you had 1,000 equal universes and from this moment on, they go in different, or they go in their own directions, I would say fewer than 20% of them would have a 20K Bitcoin as a result. So, yeah, the probabilities have definitely changed because of these candle closures, with the understanding that SPX is literally pulling Bitcoin exactly with its every move. All right. Yeah, big change, actually. That's a good question. That was a really good question. Okay, anyone else get there? Zakaria Kamal MTRG. I got my first cold sore in like freaking 5 years. I used to get them all the time as a kid. And if you're somebody who gets them, or like has a family member you live with who gets them, like a lot of people say L-lysine and all that stuff or whatever. I swear, what works the best is freaking Benadryl spray, or the Equate version. I think it's used like to dry up poison ivy. Like it gets rid of the itch, it dries it out, and it makes it go away faster. Like Benadryl spray or the off-brand. It is the best thing for cold sores. All right. Anyway. That are outside of your mouth, not the inside ones. Okay. Holy shit. That's 3.3x. My goodness. So this came out right as Bitcoin made it sit. That's a bad timing. So it came out right at Bitcoin's top. Man. And to have this good looking of a chart for like the worst timing possible. This altcoin is the real deal. I don't even know what it does. I can just tell by price. Plus the fact that it came out like other coins that came out right at Bitcoin's top, they look like they're straight freaking down. Not only is this one of the nicer charts in crypto, but it came out at the worst possible time, giving it more likelihood of having a horrible chart. So it's like a double whammy there. This is, and I probably said something similar last time I looked at this. But it's kind of impressive. I would take it by levels here. So the way I would interpret this, instead of guessing which way it's going to go, I would do a two-step approach. I would identify where is the middle, therefore no edge. I would identify a threshold that my edge like gets pretty good in either direction, up or down. Right? So I have a tradable edge, I can take this. And then after those points, up and down, where will it go, depending on which one that breaks, right? So that's what we'll do. I don't want to make a guess. I simply want to guess where it will go if it goes up or down, and I'll let you know when you can have an edge on that move. All right. It's not a coincidence that a line parallel to this hits this low and that high. It's not a coincidence. It's just the way crypto moves. I don't freaking know why. I don't know why. It's awesome that it does. Okay, you got a few things in play. All right, these actually no to the downside. Hold on, I don't have a downside target. This one needs to come this way. This is going to have a ton of support on the way down. I'm going to pick that wick down, that move, that support, and that support for the next horizontal box. And that happens to align with this parallel line, so that's good. All right. So the way I would see this is breaking to the upside, I would use the triangle, not this horizontal. Because of all this stuff, like this line is here. So just because it gets above there, I don't think your probabilities, they begin to get better to the upside. I don't think you have a tradable edge for more upside until this is, rocking and rolling. So if you were trying to go long on this, and you got in profit, once you get to this line, I would probably, I would make sure that I'm in a risk-free trade at that point. You could easily get, so that triangle is that point where it would stop. I bet it would get over this. I think it would stop in this triangle right here. Yeah, I would just jump from triangle to triangle. The price points on that. I might have to move this out a little bit. But, it might, if it happens a little later, it's going to be a little higher, like up here. So if you make this type of stuff, you try to do what I'm doing, take it out to November 10th or something, or the 8th. All right, so to the downside, I think you have a pretty clear probability. It's just this level right here where your probabilities become obvious and you have a tradable edge. But it could get a little tricky because I think once it goes below this point, it's just going to hit this, come back, and it could do some funky stuff here. But I think it's the set, and it'll probably come back above here. So for the downside, I would wait. I think it'll bounce here, unless Bitcoin's tanking, right? If Bitcoin's tanking, it's probably going to come straight here, to this point. But so this is the ultimate target that I would say it's going to hit somewhere about there if it were to break down. But the flipping point of probability is when this line is used as resistance. So if it goes below it, comes back even up. Here, I'll just draw it. So the way it could do is, since there's so much support here, is it's not the first moment it goes below, oh, my edge. I mean, yeah, your edge is probably there, but timing, it's probably going to go like this. It's probably going to get back into here, boom, boom, boom. And then the second time you use it as, use it as resistance, then it takes back, that's when you have a tradable, a really strong tradable edge. So I would say something to that effect, but stretched out timing wise, because this line is too close. Oh, wait, maybe it's not. No, that's November. Is that November 3rd? Oh, no, that's right. Yeah, that actually, this is about right. And those are the levels to the downside when the probabilities flip. All right, MTRG. STX and Aurora price targets if BTC breaks lower. STX and Aurora if BTC breaks lower. Okay. Oh, wow. This one had a nice bull run, it looks like. Yeah, it's a little better than average. Man, it looks just like freaking Bitcoin's chart. Fucking A, this moves exactly with Bitcoin. This literally is Bitcoin's chart. It was a little bit more volatile over here though. Um, Bitcoin, yeah. So this is the same as Bitcoin, but this move, Bitcoin did not get so volatile at that moment. But this move and this move did happen on. Yeah. So did this is coronavirus, and this is on. You know, when after Bitcoin went to 14K in 2019 was coming down. Yeah, this is 64K, 69K, coronavirus or not coronavirus. Wyckoff manufactured price on Bitcoin down to 29K in July. Well, it happened in May, but then in July, ooh, this actually recovered before Bitcoin. Interesting. So this moment actually happened a month later, but the way it looks, it's the same as Bitcoin. Wow. I don't think I've seen a single chart that is so close to Bitcoin's before. That is wild. Um, yeah, so your question's really good. This is not going to move like really without Bitcoin, probably, especially since it can go up without Bitcoin. It probably won't go down without it. So, ugh. So this isn't just a line. So where this wick down to was the first candle body. So that is literally why that got bought up. Just so you know, like that is the reason. Um, that's what invited buyers to turn it around. But I don't think that will be the same. What do you call it? Flashpoint or threshold to initiate a downside move. I think once it breaks this wick, that's when it'll flood down. So you got two slightly different levels, but it's a box. So you want a box like that at those two levels. Um, wow, that's 35%. I think 18.8. So what I'm seeing now is I'm going to zoom into this area. This weekly wick right here is about 35% below current price. And what else was I looking at? Besides how big of a percentage move? Yep, and these candle bodies right there, these are weekly candles. So this is where it would go. Or no, not just that. This is where it would have a strong chance of bouncing. It could find a different area to bounce before then for multiple, like bounce points before that happens. But um, this would be my guess. And I don't think it would be all in 1 hour, right? So it would take time to get down here. But around that point right there, one of those 2 points. Yeah, there's not. There is a line right here too. It's not a box though. This is a line. So you got two possibilities. If Bitcoin legs down, I think it would drop almost straight to this point. It'd probably have a 30% move. Not in 1 hour, but it could be in one day. I mean, look at this. This candle right here, that was 30%. This candle right here, 30%. This candle right here, 32%. So 30% moves happen. Yeah, it would hit this line. And it would have a chance to come all the way back up here from the breakdown point, and then once it failed this line, it would come down here. I don't think it would come all the way down here in one swoop. That would have to be like a move, a Bitcoin straight to like 14K. I don't know if that's going to happen because Bitcoin's gone sideways for so long. I think it's going to bounce at like 15.4 because my origin line is ascending. Yeah, but those are your 2 points where it'll go. How it interacts with it, whether it bottoms here and, for a while and then comes back down, I don't know. But I would say if it is to get to this point, it'll probably have a pretty good sized bounce there first, like, 25, 30%. Could be a pretty big one. And then once it came back in, it goes sideways again, kind of mopes around, and then lets go and comes down here. That's how I would see this. Yeah, and the cool thing about this, there's not much to look at with the small amount of price history on there. So there's not a lot to work with. So I that makes it a higher probability scenario. Because what makes something, one way to visualize if you have a probable trade in the absence of traditional finance hedge fund algos, because then they use what I'm about to say as fake outs to trick you. But this, in the absence, so they're not trading this. So, but in another way to view high probability scenarios is the moments that are the highest probability trades are when the most different groups of people, when you have the highest number of different types of traders seeing the same thing for different reasons because they trade differently. A lot of people like to trade horizontals and diagonals only. Like literally, that's all they do. A lot of people use EMAs. A lot of people, use different types of stuff. And here, there's not a lot to look at. So there's a higher chance that out of all the different types of way people would like determine whether they should become a buyer, it's probably going to align all at the same time. So those are pretty freaking solid levels. All right. Aurora. Yeah, that's a kind of a hard chart to digest, shooting from the hip there, but in the end, it was actually kind of simple. It just took me a while to have my brain look at it to where it was simple. Dude, why do you want to know about this? I don't know, man. Oh, it only came out in April. Yeah, it had bad timing. Okay. I don't know. So my gut reaction to this is this coin will probably bottom about a year, between 9 to 18 months after Bitcoin bottoms. Please keep that in mind. So will most altcoins. It'll look like I'm wrong for a while because your Bitcoin's going to bottom. Ethereum and a lot of altcoins will have 300% and 400% runs. People will be claiming end of bear market, which for Bitcoin it would be. But when Bitcoin makes a macro high or low, all these fuckers, maybe besides Ethereum, Matic, Atom, Quant, MTRG, besides those, they're all going to make a lower low, right? Just like Cardano did about 500 days after Bitcoin's bottom, 450 or whatever days after Bitcoin's bottom in late 2018 in December, right? Okay, and Cardano between then, those 500 days had a 400% rally. So this is one high probability. I want you to remember this. Yeah, you can have a tradable rally, but in terms of investment and like when can I hodl, it'll probably be 9 to 18 months after Bitcoin bottoms. Okay, so Yeah, you don't see this every day. That's not a very common sight. You got two different angles of wonder why my rotated box settings got weird. You got two totally different angles of channels of like trading activity. Gonna make this guess a little harder, but it has broken below that. It's 110 days. Aren't you giving me the actual number of days? Stop being stupid. 64 days. 110 days. And it's breaking below. Yeah, this is getting ready to so the path this is getting ready to take is going to be a steeper slope than this, I'm telling you. It's getting ready to, it's going to start accelerating. Man, I can't tell where this is going to go, though. It might be a fib, a bearish retracement. Yeah, because they're totally different angles. Actually, wait, hold on. Never mind, I got it. So this will align with a fib that what I'm doing now will align with the fib that gets it right. Because one thing that drives me nuts is like when I watch analysts is prior to the move, they never mentioned this is going to the the 0.5, but after the move happens, like I see a lot of people say, oh, look at this fib and see exactly 618. Like, but you never talked about that. Like that wasn't what you were saying, right? But all right, anyway, yeah, I think just if you, that's not all sources, but just be careful if you're somebody who hasn't dialed in on the sources of information you use. That is one thing that you need to be cautioned with. Okay, because there are a lot of fib lines. So it's kind of like me, when I do 3 price paths, it increases the probability that it works, which is why I do that. But it doesn't mean that you pick the right one in advance. But here, like, this will align with the fib that gets it right. However, that this fib should be maybe let's see here. I'll do a trend-based fib extension. Let's do from, so this is not a fib retracement, this is a fib extension. And the reason I'm using a fib because there's nothing else down here. So that's when I feel that fibs are fucking really useful. Either all-time high breakouts, when you look left, there's nothing there. And half the time when there's nothing there on spot price, you just go to the Bitcoin pairing and you just use that chart on determining when to sell. So when you do have a Bitcoin pairing and you look, even though you have an all-time high breakout on US dollar value during the next bull market, what I'm saying is, if you remember, it'll be very valuable. If you have blue sky breakouts and you're trying to determine where the hell do I sell, and you can't figure it out because there's not much to look at, because there's nothing up there, you go to the Bitcoin pairing and there will be. And so whenever it hits, like, you just literally pick weekly horizontals, and then when it hits it, you can sell them at the versus tether, which is even better than using fibs going up. But if you have neither, like for example, the coin I played with a lot was BPRO. It broke out, had all-time highs versus Bitcoin and versus its dollar pairing. So all you had was fib lines plus the magic line that I chose, which got the top exactly. But you don't always have that perfect of a line. All right. So that's in these situations, like right now, there is nothing else to look left. So fibs are probably going to be among your best options. So I would say, well, that only gives it 1 day. I don't know if that was the right one. Let's just do a quick retracement. Oh, I did that. Oh, sorry. Let's go from... Yeah, it's going to smash through that. It could bounce there, though. But I think it would end up going through it. On the second time it touches it. So you'd probably get a bounce from there. And but the next time it came to touch it, I think it would break down. Yeah, I just think it'll be this line. So all you need to do is, because it's a descending line, I can't give you a price point. You just need to look at this chart and you need to do the same thing. It's gonna hit this line. The next Bitcoin move down, it's going to hit it. So depending on when, if it hits it on, like, let's say on the 24th, which is probably a pretty good guess, it'll be 53 cents. If it doesn't break Bitcoin and this doesn't break down for a little later, it'll be lower. If it happens sooner, it won't go as far. Like if it happens tomorrow, it would hit 57. Does that make sense? So yeah, just draw this darn line. Easiest way to do it is just look for wick high and support, or a low. A high touching a low, point to point, that's the line. Boom. Yeah, these lines they'll work better than fibs, probably for this one. I don't like how the fibs were aligning, or even the fib retracement. It's called a trend-based fib retracement, which I like better than just the simple retracements. All right, Craig, I already did ADA and I recorded it, so it'll be uploading here shortly. But you might have asked that question before I covered it, so I assume you've seen it. But if you haven't, Craig, then you'll be able to see it tonight. And if you go to bed in 2 or 3 hours or whatever and haven't uploaded it, you'll be able to see it when you wake up. Yeah, Polkadot. Yeah, Polkadot has been tough. I think I tried, just so you know that I'm not somebody who only shares my success, right? Even though I will showboat, like, really good calls and shit, obviously. But I think I've tried small trades, just to keep the golf swing sharp. That's how I relate it. Like, if you don't golf for 2 years, you're going to be rusty. So if you practice, 10 minutes every day, you'll maintain. So same with trading, right? So I've been practicing with Dot, mostly not to try to hit anything big, but to try to, just to figure out the chart. And I feel I do it better if I have a little money on the line with risk management. And I think my last 5 trades, I think I was like 0 for 5. It just chopped me up. Yeah, it's been tough. Dot has kicked my butt. Not from a money standpoint, because I wasn't doing big trades, but I was trying to figure it out. And I haven't had much luck. Ooh, it finally had the move. Missed it. Damn it. I'll make myself small here in a second. This was the move I've been trying to get, and it kept knocking me out. And before I start recording this, that goes in hand in hand with something I said earlier. Again, even though I've been doing this mostly for practice, not taking on big positions to try to like increase my account, but identifying it is a skill set to quickly and accurately identify when it's a good time to trade or not a good time to trade. Like that is such a valuable skill set, and it's probably something I haven't really been keen on since this bear market's really taught me that lesson because it's had so much sideways. Last bear market only had one stint of sideways. This is acceleration and then some type of like sideways, either slightly sideways up, sideways down, or sideways, right? Even though one of those was very volatile, I think it was probably the first consolidation move was very, very volatile. It was very tradable. But outside of that, the other three have been very flat. Okay. Actually, wait a second. Okay. So let's take a look at Polkadot. It was I've been trying to catch this short for a while, and I think I gave up. I think it was on this candle. This is the 4 hour. Yeah, this is the 19th, so just yesterday. No, I gave up back here. I think I gave up somewhere over here, trying to catch this move. It just kept going sideways and chopping me out. Trying to take a trade down to here. So let's go dive in and see, what was the initiator of this, since Bitcoin hasn't made new local lows and this did. Like, what was the driver? What was I missing? This will be a fun one because I don't know the answer. I'm getting ready to look at it because I didn't know this target was finally hit. I've been waiting for it to hit this orange line from this blue line, and I think I was trying it right when this channel line was hitting here. This is when I became really. Yeah, it was about 3 days ago I was trying it, and then I gave up. All right, so let's dive in there, see what I was missing. Okay, so on Chainlink, if you're new to my channel, what you are seeing here is a macro. Is it a macro? It's a midterm time frame trading channel. It helps you visualize what the hell is going on with price. It is 166 days long. I only have one horizontal kind of cutting through it, muddying stuff up, right? So trading channel, you won't see this really anywhere else. So I'm the one who makes his charts look sexier than any other YouTube channel out there. So this is if you're newer and you're just catching this part, go ahead and hit subscribe and the bell for all alerts, because I'm going to show you how to nuanced ways to look at price, and that could be very, very helpful for you. All right, what was I missing? Oh, yeah. Okay, so what my game plan is after DOT came down to the bottom of this point of control, which I already had there before this move happened, and I probably already have covered this. Hey, look, it's to the dollar, right? So, my lines work. Especially during volatile moves. It hits the volatile moves very, very well. So my original idea was, okay, after this move, if it comes back up to this horizontal, I want to trade a rejection from it and trade it down to here. Yeah, I was only looking for about 4% move, which in this choppy market, I'm technically only looking for about 2% moves. That was my original plan. But I think because this was a failure pattern, I don't think I caught this. I started actually trying it until here. So failure, rejection, I thought I had a greater chance. So I probably started playing it around the 16th, not the 17th. And I was trying to essentially catch a short around here, expecting a rejection. And then as I tried and failed to get into a short, I said, hey, it looks like this is where it's going in this triangle, because you have two real lines interacting. Therefore, if two real lines are close to each other and it will actually get the rejection, then it's going to touch the top one if they're close. That's just how it works. Works with EMA plus a line, EMA plus a horizontal. If they're right next together and price is approaching, it'll just hit the top one, like literally almost every time. All right. But I think it got me out. I don't think I got even, 0.4, that might have stopped me out. Okay, I was probably trying to enter between here and here with a stop just above it, and it got me out. So tried and failed again. And then I think I was in a successful position, but it had not taken my profit yet, because my profit take was down here, And then it just stopped me out. And I think I did it in profit that time. Yeah, the time I had it, I had a profit. So what was I missing? I'm not seeing what I was missing. Maybe it was hanging on to this wick and this wick. Yep. It was hanging on to that week, so I was missing that. What else was I missing? No, I wasn't missing that because I thought this is the daily 10, so because the daily 10 was below, and price of in a bear market typically stays under it, it increased the chance that if it went above here, it would just be a failure pattern, thus be rejected from this blue line. Yeah, I was really interested in trying to catch the short over here. And it even took all the stops hiding above this wick. Like it took it. I don't know. This is just, I don't know what I was missing. This is just hard to play. Yeah, this section right here is this is pretty tough. Yeah, I was not successful in trading that. All right, where's it going now? So again, I did all that just to show you that I'm not fail proof, right? That price action kicked my butt, and that's why I try to stress, it is a skill set to learn quickly and accurately when to not trade something. And I think I only tried it 4 or 5. I think I actually tried it 5 times. I should have given up though. I would say DOT has a good chance of coming back up almost exactly to this point right there. So I would say it has 3 most likely points to come up for a lower high. I would say horizontal, and then 1 is a moving target, which is this line here. So see how it used this line as resistance? It might take its time and do it again, like way over. It'll probably take longer to do it though. So these would be my 3 points of lower high targets. But since these are horizontals, these are locked in, right? No matter what timing it is. But the third one right here, the price depends on the timing. Yeah, I think it has an extremely high chance of hitting one of these 3 targets. And then turning back down. And then when it does turn back down after this, then I think it's going to interact. It has a chance to interact heavily with this line. So let's say it could just go like this. I'm not for sure if I would bet on this happening, touching the bottom of this guy. It might just work its way down to do yearly lows by walking down this support and then taking out that low like this. Does that make sense? In the event that Bitcoin has a very violent move down, well then yeah, that is when this line comes back in play. But in the absence of a violent downside move for Bitcoin, I would say it'll walk down here and take out that low over here. But if Bitcoin has a violent move, well, what line nailed where it bottomed last time? Last time I had a violent move, this line. So it's probably that line. And that's how I would, these are all the things that are the bumpers for Polkadot. And also just realize, Polkadot just had an extended period where it was really hard to play, mostly because Bitcoin's going sideways doing nothing. But it could end up being really hard to play back here too. like right when you're in great position and it starts to go your way, then it just goes boom, get you out, and then it comes down. It could easily happen again. Watch out for that. Oh, price action. Okay. Yeah, let's do quant. Okay. All right, quant. And then I'm going to wrap it up. Quants, price action is doing something a lot different than what I anticipated. The two price paths back here is what I thought how the price of quant would move. I was guessing it really wanted to hit 152. I think this was my favorite guess, but in the event it went up, I gave you a price path on how that would take out this high. So we could obviously delete the blue right now. And what we'll do here is, now that we have a little bit more information, I'm going to offer you a few more ways on how price action might move and why this is slightly surprising. I'll tell you why I made this guess and why this is kind of improbable to make this pattern this big. So let's dive into quant. Oops. I hit the wrong button. I didn't mean to hit that one. Okay. So the reason why I offered this price path back on 2 days ago, I guess, was because a lot of times when you have an aggressive move up, you'll have a nice lower high that is not necessarily based on timing, but it's more based on symmetry of how price got up there. Like a man, right? You see, like humans are symmetric, as are most animals. I think that's an accurate statement. Vertically symmetrical, right? And therefore it doesn't matter the timing, because depending on the chart you are, like the way symmetry works, that's why I guess the higher or the lower high here, because of the timing on how these higher highs went, right? So I guess from a timing standpoint, it would probably work its way up, make its higher low on this time axis. And the way I chose the height of that is just roughly a 45-degree angle from the top, because crypto loves 45-degree angles. That's why you see so many triangles, and just roughly, between 30 to 45-degree angles, right? All the time. That's why I chose that price path as my favorite one. Now, I guess I can delete it because it was clearly off, even though my target of letting you know I think 152 needs to be hit, that'll probably end up being right. But sometimes most of the value in having good technical analysis is how it gets there, right? And I think that's, if you're a new viewer, that's why I think that's how my channel is a lot different than almost any other channel you're going to find. I don't only tell you, I offer different price points, both up and down for a breakout, but I let you know when the pivot points are, when it becomes probable of one of those two. Not only that, then I tell you how it will get there, right? So if you're a new viewer and you're just watching this part, go ahead and hit the subscribe button with all alerts, because I'm going to show you how price moves a little bit more, even though I was definitely off on this one. But I'm usually not, though. And so from a symmetry standpoint, usually you don't have this type of thing happen so long. And not long from a time perspective, long from a symmetric perspective. This is like a elongated, I guess, how pattern traders would say it, shoulder. This is weird. All right, so it's a bigger sell-off, more sustained sell-off than I thought. And the reason why, from a psychological standpoint, why that kind of stuff happens like I proposed, is because after a big move, the first pullback, you still have a lot of buyers who believe that this high, like that wasn't the high, right? So in order to take out this high now, it will have to go sideways for a while. Like, I don't think it's just going to spike up from this point. I don't think that's going to happen. Like, it'll be, I'm only on the 15-minute chart, so it might not be weeks, but it'll be like out here. Let's go to a bigger chart. When would that be? Yeah, end of the first week of November. I guess it could, if it goes sideways long enough, it could take that out, but it'll be end of November. Before that's even like remotely likely. Okay. All right. You need this box on your chart, just like I told you last time. So now current price. All right. So draw this on your chart because it's going to work. And then also, I would throw on, see this orange line? It's the 1 hour 200 EMA. And I happen to be on the 1 hour chart. If I go to the 5-minute chart, it's still the 1 hour 200 EMA, right? But however, how you do it, you need it on your chart because it's getting price action really nicely. I mean, look at all this. And I think these two tools should be able to guide you pretty darn well. I would throw one more on. I would throw on the weekly 10. Because if you have a breakdown from 152, like Bitcoin accelerates down, Quant could spike down, hit that, then come right back into 152 and use it as support. But I think it would take a strong move on Bitcoin for that to happen, all right? And I think these are the tools that you need. How to interpret this? I wouldn't guess that there's going to be a move up until the 1 hour 200 is used as support. As long as it's not just above. I chose my words specifically because if I didn't say it that way, then that means at this exact moment where that wick is, you can see it. That means it becomes probable that the move, that the price starts trending up, right? But that's not what I said. Once this is used as support. So as of now, I would guess it has a higher chance in this exact snapshot in time. It's got a better chance of hitting 152 before it hits 181. And your threshold on win probabilities of that flip is either support or not support of this line. That's it. In the event of a strong move down on Bitcoin where it goes like to 17.5 or lower all of a sudden, I would expect price of quant to come down to the weekly 10 EMA, which is this red line, and then bounce back above 152 and use it as support. But without a strong move on Bitcoin, I don't see that happening because it'll probably find 152 as support. And that's all you need. You literally need this box, this line, and that line to have a freaking awesome understanding of what quant price will do next. I mean, just look how freaking exact this stuff is. Look at this orange line. Check it out. This is the 1 minute chart. Look. Sellers brought it down to it. The daily, this is also the daily 10. Little bit of buy action, little bit of buy action. The next, and then it went below, which means the next one should be a lower high, lower to this high, which is what happened. Try to use that as support. Another lower high. The next time you pass below is when you should accelerate. Even though you didn't get a true rejection, so it didn't treat this precisely the same, but as the typical way price moves. But once you take out this low right here, so coming below once, coming below twice, lower high. If you take out the low, that's when you accelerate. Technically it started accelerating when it went below this this orange line for the third time. A little bit different of price action there. Probably because traditional finance algorithms are not controlling this price. So So this is mass market psychology interacting with this. Kind of interesting. But it's similar. When it takes out this low after a nice lower high, then that's when it accelerates. Coming back to it, yeah, it just kind of hovered around it, got rejected. All right, now let's go to current. That's pretty precise stuff. So you can see, like, this is literally a real line that people are making trading decisions based off of. It's real. And it's what a decent amount of the money in this coin is looking at. Or at least when it gets close. So honestly, it looks like it's getting ready to pop up to it now. This shape right here is not bearish. And so let me stop you there. I'm on the 1 minute chart. So a bullish formation on the 1 minute chart might have like a 2-hour shelf life. Doesn't mean back to 180. Right? It could just mean back up to the daily 10 or a failure pattern above. This could be the moment where it gets above and tries to use that support. But if it can't do it within a couple hours, then that setup is, the shelf life is done. Okay. Yeah, I actually like this formation a lot. But because it's in a position of weakness, Bitcoin's price could bring it down, even though this has been ignoring Bitcoin price. What kind of percentage up would that be? Yeah, that's tradable. It's 4%. Yeah, honestly, it looks poised to make a 4% move up. This is not financial advice. I'm giving you my opinion, and I'm explaining why I hold that opinion. What you do with it is your decision, and I'm not responsible for it, for what happens. Unless you make a hell of a trade, then you can send me some Dash. I'm just kidding. That is a joke. If you break out of this formation, though, it'll probably bounce at one of these two areas right there or right here, make another lower high, potentially, and then come down. So if it does break down, it might give a second attempt here. But if that does happen, it is more likely that it forms a lower high after hitting this. So it'll probably get some bounce, but if it does hit, it'll probably be a lower high, and it'll probably be in line with, something like this. So it could get stuck in this triangle. And then if it does go sideways that whole time, it has a chance to break up. But I would watch out for this triangle. There you go. And if it breaks down below this point, I don't think it'll find support at that point. That is when it's going to hit 152. And I would not take into consideration 181 until, like I said earlier, it's not even likely to happen. Like, it's not even a topic of conversation until this is used as support. And of course, this is already close to here. Why is that valid? Well, that's the line that price is interacting with right now. So it's actually has a, it looks like what might actually happen is it forms a bigger triangle. It could do this because this orange line goes and price wants to hold 165. That's a possibility as well. But regardless, this 165 line for short-term micro time frame, which is what I think the question was, this line is pretty big. This is not going to be big. If it breaks this, it's going to go below there, and it's going to hit 151. And that should give you both upside targets, what would initiate an upside target, downside targets, and what would initiate a downside target, and then what I think in the exact immediate sense. That's quant for you. It's gonna be a little bit more sideways than what you've been accustomed to. So perhaps the most important thing I can say about quant is, if you're somebody who is betting on or has the expectation of it to continue to do what it was doing, use this line. Don't even think about it until the 1 hour 200 or the daily 10, same thing, has been used as support. Like, discipline yourself. Don't even think about it until that happens, please. That might be the most valuable thing I could say to people who like quant, because it's easy to get sucked into biased expectations, and that makes you trade the wrong way. So that is when you can start thinking about that stuff, and there you go. All right, I'm going to peace out until Tuesday. Again, if you like this type of stuff and you want to be able to ask me questions live, that's what Discord is for. We jump on with microphones and share charts, and I just had a VIP teach me something that I had never considered, a way to make a range. And he wasn't even trying to teach me. He just said, oh, I have this level here on Bitcoin. It's the same as yours. And I go, like, why did you do it? He goes, oh, because this. I'm like, what do you mean? Why is that? And then he got into it, and I learned something pretty damn cool. So we have pretty good discussions. It's not just me like doing this. If people don't agree with me, they tell me why. They share their screen. So if that sounds cool, that's what Discord's for. But if you can't, if that's not something you can do on both ends of the day, early or late, then the YouTube tier might be for you. So we'll see you next.